प्रेजेंटेड बाय eBix कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines tonight. Markets march northwards for the fifth day. Sensex up 85, Nifty up 45 points amid choppy trade. Metals lead the rally. Realty and banks are the big losers. A day after stunning the markets with the country's biggest share buyback, TCS talks exclusively to Business Today TV, says will hire 50,000 employees in the next 6 months. Adani Group forays into yet another sector, inks $5 billion pact with South Korea's POSCO to set up integrated steel mill in Mundra. Vedanta Group says it's ready to pay $12 billion for BPCL in line with the oil refiner's market cap. Rakesh Jhunjhunwala backed Akasa Airlines to focus on smaller towns. CEO tells Business Today TV in an exclusive conversation that despite COVID operations on track for the first flight in late May. And yet another blow for the Indian government in its legal battle with Davis. French court awards government-owned property in posh Paris locality to the company. Markets show resilience on a weekly F&O expiry day amid a tepid global mood. Benchmark indices ending a choppy session higher, managing to take their winning streak to a fifth straight day. Sensex up 85 points but managed to hold on to that 61,000 mark. Nifty ending above 18,250, up about 45 points. Supported by IT heavyweights, TCS and Infosys. Gains in metal and oil and gas shares were offset by losses in financial and consumer goods stocks. Tata Steel, JSW Steel gained between 4 to 6%. Other gainers included Sun Pharma, Coal India and L&T. While a few IT stocks gained, Wipro tanked nearly 6% post-earnings. In the tech space, HCL2 was among one of the laggards. Other losers included Asian Paints, IndusInd Bank and HDFC Bank. A day after it surprised the stock markets with a huge 18,000 crore rupee share buyback, TCS is setting itself an ambitious hiring target. In an exclusive conversation with me earlier today, N. Ganpati Subramaniam, the company's COO, announced TCS will hire 50 to 60,000 new employees in the next 6 months. Here's a part of that interview, the full version available on the Business Today YouTube page.
Overall, we had a fantastic quarter in a seasonally weak quarter. I think we have done well, both in terms of the growth momentum that we have seen and across the verticals and the major markets that we operate. It has been quite broad-based, right? On the margin front, this is a dip of about 60 basis points, primarily because of some of the supply side challenges which we have all seen, right? And we have gone about retaining our people significantly. And while attrition has inched in, we still enjoy at least a 10 percentage points or more from the competition. Plus, we continue to stay invested in the business, specifically on digital technologies and the training that we do to our people. All of that we have not compromised, right? So I think it's something that we are confident of gaining back, and we stay focused on our margin band of 26 to 28%.
So what is the strategy as you see it going forward in order to sustain operating margins, in order to, operate in light of, as you see it, continued spends? How do you see things shaping up now in the next year or so?
Okay. There are multiple levers, and growth is one important lever. Right. And we are seeing an unprecedented velocity of technology change, right, which calls for constant investments, constant refresh. Given our focus and strategic intent to grow our business organically, grow our talent organically, take the entire organization with us in terms of both seniors, juniors, and everyone, right? So in that context, sustained investments are key, and we will not shy away from making those investments. This is not to say that we are not going to acquire or we are not going to make inorganic moves in the future. But at this point in time, I think we are happy with the current momentum that we are having, current set of deals that we are seeing in the market, and how much deal that we have won in the last few quarters, and overall pipeline looks good. So growth is going to be one important lever, and efficiency and innovation is the other two levers which we are employing all of them. And as we move forward, I think some of the initiatives that we have taken, whether it is on the cloud side or intelligence side or machine first side, all of them are expected to kick in, and that should contribute handsomely to the margin.
Okay, so let's talk about attrition. IT services attrition was 15.3%, 11.9% in Q2 FY22. And though these are better than your nearest competitor, Infy's 25.5%, do you see higher attrition leading to, of course, a higher employee acquisition cost? You've already kind of touched upon it, but is this going to continue to be a pay point?
I don't think it will be a pain point per se, because we have as a strategy focused on creating our talent organically. So there is a huge amount of lateral and as well as freshers we induct into the organization every year, right? So in that context, I think our hiring engine works good, and we continue to induct a lot of fresh talent from the education institutions and universities in India and abroad. That is the first point. The second thing is it going to, while there are indications that, it's kind of plateauing and the supply situation should ease, the market demand will also probably ease. But I would like to be pessimistic about it rather than very optimistic about it, at least for our internal planning purposes, right? So I think, my own hunch is given the demand environment, we are likely to see this continue for the next 2 or 3 quarters. And internally, we are making our plans to hire a lot more at the entry level. Given that we have a very good pyramid, very good set of experienced homegrown TCS leadership, which will be able to induct the freshers, train them, and then construct a team that is fit for purpose.
And our audience, of course, is very interested in that, Mr. Subramaniam. So when you're talking about hiring, and I know that we see updates through the year, but what's the kind of hiring that you're looking at? You said freshers, but the kind of numbers and the kind of opportunity perhaps that people can look at TCS.
See, it'll be certainly much higher than what we have been doing so far, right? I think, I won't be surprised if we hire another about 50,000-60,000 in the coming next 2 quarters, right?
Okay.
So I think that's the kind of demand that we see, that the kind of opportunities that we see. And anyway, when all the people who are going to be coming out of the universities for whom we have already offered, close to about 30 to 35,000 of them will join as well in the coming year, right?
So about client acquisition, if there's any insight you can give us into that, the kind of deals, pricing, verticals, are the newer deals coming in at higher prices? What's the pipeline looking like?
See, we have, as I said, in the last 9 months to 9 months, we have grown our business significantly, about 17.5% of the business. And more importantly, across our revenue bands, whether it is $100 million or $50 million or $25 million, $10 million, we have added customers. More importantly, we have added nearly 100 clients, right, in the last 12 months in the $1 million plus band, which means that they all have the potential to grow to 5 million to 10 million, and eventually to 50 million. So there is a significant amount of client acquisition that is taking place, and all of them are leveraging our global workforce, our talent cloud as we speak, and leveraging the infrastructure, the labs, the innovation network, everything that we have, right?
Earnings season starting with a bang, with tech majors reporting a healthy set of numbers. Let's now find out what Q3 has in store for banks. Sakshi Batra is here to tell us what to expect this season.
That's right, Abha. Well, private sector lenders are all set to report their results for the third quarter starting this week. Now, this quarter of FY22 is widely being seen as having been a strong one for these Indian banks, both in terms of balance sheet growth as well as the asset quality. Now, this optimism is already being reflected in the movement of some of the bank stocks over the month so far that we have seen. Now, analysts expect lenders to report a surge in net profit this time around. Jefferies India has estimated an increase of 37% on a year-on-year basis in the net profits of banks at the aggregate level. Also, the brokerage firm has said that a healthy retail loan may definitely contribute to broader loan growth this time around. Large lenders, especially such as ICICI Bank, HDFC Bank, Axis Bank, it says are expected to report a double-digit loan growth this time around. As far as slippages are also concerned, Jefferies is in its preview report has said that it expects a slight moderation in slippages and the credit costs, and therefore the asset quality will improve. It believes that banks may see the tail end of downgrades and provisioning from COVID wave 2 as well. Now, an ICICI Direct Research note has suggested how private banks with healthy capitalization should now grow at 10%. Their credit growth also has been strong and are continuously gaining market share from public sector banks as well. Now, most of the analysts do believe that the net interest margins for most banks may not improve in this quarter sequentially, and the growth this time would largely be driven by lower provisions than the NII growth. Now, most brokerage houses have also expected that large banks will continue to outperform the mid and the smaller banks even in this quarter, and there is an expectation from the large banks to post an NII growth ranging between 9 to 12%. Now, what also will be key to note is that the third wave of the pandemic is gathering pace. So what's the management commentary on the business growth outlook and the asset quality per se will be important to track. The outlook provided by the management of banks will also be critical to assess the FY22 performance as a whole. For now, the impact of the rising COVID cases on the economic activity does not really seem intense and may be limited to already weak pockets of credit as of now. Back to you, Anna.
Thanks for that, Sakshi. Now, the Adani Group is all set to try its fortunes in the steel sector. The company has tied up with South Korean steel major POSCO to explore opportunities, including setting up of a steel mill in Gujarat.
He is the first generation entrepreneur, the second richest man in India, leading a group which was the third to cross $100 billion in market cap. From coal to power, ports and airports, roads and renewable energy, edible oil and real estate, Gautam Adani is now readying for another big plunge, this time into the country's highly competitive steel sector. Just last month, Adani had set up a subsidiary to explore opportunities in the aluminium sector. A month later, the Adani Group has now signed $5 billion MOU with POSCO to explore business opportunities, including setting up an integrated steel mill at Mundra, where Adani also has a huge port. The non-binding MOU also furthers collaboration between the two groups in areas such as renewable energy, hydrogen and logistics. The Adani Group is already a market leader in most of the sectors it dabbles in. This includes ports, airports, logistics, coal mining, power generation and distribution, data centers and food processing. Last year, Adani had announced his most ambitious project yet, an investment of $20 billion in renewable energy over the next 10 years. A tie-up with the influential Adani Group provides a second opportunity for POSCO to make it big in India. Bureau Report, Business Today Television.
Mukesh Ambani-led Reliance Industries has signed an MOU with Gujarat for a total investment of 5.95 lakh crore rupees. A large part of the investment will be used in developing a green infrastructure in the state. Reliance will set up a 100-gigawatt renewable energy power plant and ecosystem for green hydrogen development. The projects are expected to create 10 lakh jobs in Gujarat. The Indian government has strongly rejected Tesla founder Elon Musk's claims on the challenges which the billionaire said his company is facing while working with the Indian government to get its cars launched in the country. Government sources have told Business Today that Musk is trying to build pressure through social media and that Tesla wants India to reduce import duties on its cars without committing to produce in the country. The source said that the government will not bow down to pressure tactics, adding that India currently has a PLI scheme for automobiles, especially electric vehicles, under which Tesla would get benefits if they produce locally. Tesla can bring in cars in kits with 0% duty and assemble them in India. The comments come after Elon Musk earlier in the day, while replying to a Twitter user, said, and I quote, "still working through a lot of challenges with the government," unquote. Musk was replying to a question on when Tesla cars will be launched in the country. Interestingly, a social media poll by Business Today shows 3/4 of the respondents are in favor of imposing import duties and getting the cars built or assembled in India. A posh apartment housing India's Deputy Chief of Mission to France has been handed over as collateral to Davis Multimedia. A Paris court has handed over the apartment valued at around 3.8 million euros to the shareholders of Davis. The company has approached courts in several countries against the government of India, trying to get the government to cough up $1.2 billion. Davis had won in a court case in US in October 2020. This is the second big win for Davis in a week. Last week, a Canadian court had allowed the company to seize up to half the deposits Air India has with the International Air Transport Association. This amounted to nearly $30 million or 222 crore rupees, taking the total amount seized till date to around 254 crore rupees. The game plan of Davis has been made abundantly clear by one of its counsels, who has said, and we quote, "India has assets like this all over the world. This is just the beginning. We're planning many more seizures." The up-and-coming low-budget airline Akasa Air, backed by ace investor Rakesh Jhunjhunwala, has said it will focus its flight operations on smaller cities. Talking to my colleague Karishma Sudani, Vinay Dubey, the CEO of the airline, said that despite COVID challenges, the airline will take off on time.
First and foremost, how's the planning going on for Akasa Air?
It's going well, actually. And I feel a bit sad saying it's going well, given the raging pandemic all around us, and the toll it's taken on human lives. So please excuse the fact that I've said it's going well, but within that context, it's going very well.
Right. And has there been any direct impact, because it's going well, but has there been any impact of the third wave COVID-19 on the timelines and the progress that you had set designed?
Not really, because our plan is to launch our first commercial flight in late May or early June. And so most of the work that we're doing today is very inward focused. We've got a lot of work that we're doing with the DGCA to try and get our air operators certificate. It's a very rigorous process that they have. And there's a lot of planning and documentation and process work that needs to take place. We're also, just started hiring for pilots and flight attendants. So at this point, there's not much interference that the third wave have. Of course, like all good companies, we have shut down our offices, and we are only working virtually from home for 98% of our staff. So we're taking the right precautions, but in terms of our planning, no, it's not. It has not changed course.
Right. And when do you expect the first aircraft to arrive? You've placed an order of about 72 737 Boeing Max aircraft. So when is the first one expected to arrive, and when is the takeoff expected?
Yeah. So I'll give you a bit of a timeline. So the first aircraft we hope to get in the second half of April. The first commercial flight will be in late May, early June. And then just to give you a slightly broader perspective, we hope by the end of the fiscal year 23, so by the end of March 23, we hope to have about 18 aircraft that are flying in the Akasa fleet. And then over the next 4 years, we'll get about 12 to 14 each year. And that's how we get to 72 aircraft over a 5-year span.
When is the first takeoff expected? Is that going to be post-March?
Yeah. When I say take off, I have to be careful in that when the first aircraft arrives in the second half of May, we will be flying it because that's part of the requirement to get an air operator certificate is that you have to go on these test flights. So I'm ignoring that, but the first commercial flight will be in late May, early June. I can't be any more specific than that today because we're going through this process of getting the air operator certificate today.
The wheels that every youngster dreamt of spinning. Yezdi, a bike brand which had ridden into the sunset over 2.5 decades ago, has now returned. This time as part of the triumvirate comprising Java and BSA. Will Yezdi be able to make a place for itself on Indian roads? My colleague Chetan Bhutani had a conversation with Anupam Thareja, co-founder, Classic Legends.
Even for Java, which is a slightly older brand than Yezdi, almost 85-90% of my customers are below the age of 30. So contrary to expectations, the people who know Java, love it, will buy it, but it's actually the youth. See, youth is a very large population in our country. But within that large population, there is a exposed, there is a mature youth. There is a youth which has achieved something. There is a youth which wants to experience. There is a youth which is aware. So the new macho is actually more aware, more stories, slightly bit of maturity, achiever, responsible. So that's my target, and it's large enough for me, right? So I think this bike is going to cater to that attitude of Yezdi. Okay. In terms of competition, I will not give you a standard answer that I don't talk about my competition. I'll give you it a slightly different way. I think the mid-market segment, Chetan, is going to grow, right? Okay. We have a huge entry-level segment which has to slowly mature towards the mid-market segment. To my mind, one, the segment will grow. Two, the segment has been reasonably generic as of now. There are segments within the segments which were not explored. And we looked at those segments. First, we had to see whether there are those segments. Are there segments in that market? The answer was yes. Is there a market in that segment? Is that what we had to explore? That's why we are taking out categories to expand that segment. So to my mind, entry of Yezdi will expand the mid-market segment. We will create a few segments and own a few segments. That's why if you see our Java, we had a Classic, which was a road to the past. We had a 42, which was an edgy bike ahead of it. And then we had a crazy Bobber, right, which was a new market that was created in the country. Similarly, with Yezdi, we are creating 3 sub-segments. We are creating a roadster segment, we're creating an adventure segment, and we're creating a scrambler segment. So I am very confident that we will not only expand the market, but we will also be able to establish a few new segments and grow them.